Good morning, it's Friday 21st of October. My name is Tom Elliott. This is my market report. Also happens to be the 24th anniversary of the 1987 share market crash. Of course, that was known as Black Monday or Black Tuesday, depending on which part of the world you're in. Today, well, some people would have you believe that capitalism is under siege again. Here in Melbourne, where I am, the Occupy Melbourne protest, which is an offshoot of the Occupy Wall Street movement that's obviously come from the US, is in full swing. The city councillors have decided that the protesters who have been in the city square for over a week, it's time to move them on. The police are having a rather tough time doing it, and it seems a massive demonstration has resulted. Despite this, the share market is up this morning, not much, but it's up about 15 points or 0.25% as we speak. Now, a bit of corporate activity going on. Macarthur Coal is a company that's had a number of takeover bids over the years. This most recent one has finally come to a conclusion this morning. It looks like Peabody Coal, the US energy giant, will be the winner. Peabody originally bid $15.50. It lifted the bid to $16, and this morning, to get a couple of Macarthur's larger shareholders over the line, it's lifted the $16 bid another 25 cents to $16.25. The bid should now go through. Peabody will declare it unconditional shortly, and it's a pretty good outcome for Macarthur Coal shareholders. That stock was listed quite a few years ago, and I think it was only $1 or $2 a share, so they've done extraordinarily well. Of course, a couple of days ago, Telstra shareholders voted to accept the government's NBN proposal. Now, the deal is still subject to ACCC approval. Telstra shares did rise over the past few days. In fact, they peaked yesterday at $3.22. This morning, they're trading around $3.13, $3.14. There is still some nervousness at the ACCC, which is now headed by a new person. When I say new, he's new to the ACCC, called Rod Sims. He seems more legalistically minded, that is, he wants to get stuck into deals more. He's been opposing Metcash's takeover of Franklin's. He's now Austar and I've forgotten the bidder as well, the Austar takeover bid, which is Foxtel, of course, who wants to bid for it. And now it seems that he wants to have a go between Telstra and the NBN. Because the government is so keen for this deal to be done, Communications Minister Stephen Conroy is very much behind it. He's staking his political career on it. I believe this deal will go through, and I think it's very, very good for Telstra shareholders. Telstra, by the way, has confirmed that irrespective of what happens, it will continue paying a 28 cent a share fully franked dividend per annum for 2012 and 2013. That's a pretty good deal that Telstra's on at the moment. It's over 9% fully franked. Wesfarmer's came out with its Q1 sales yesterday. Now, they were okay, but not great. The company's Coles stores are doing quite well. Bunnings is doing well, but Target and Kmart, the so-called discount variety sector, is struggling a bit. As we know, consumers in Australia are keeping their hands in their pockets. Perhaps what they're waiting for is Cup Day. There's Melbourne Cup Day this year, the first Tuesday in November. There's also when the Reserve Bank next meets. And many people, myself included, think it's time the Reserve Bank started cutting interest rates. I think we'll see a 25 basis point cut in a week and a half. That's on Tuesday, Melbourne Cup Day, and I think there might be another one on the first Tuesday in December. So official rates by Christmas could have fallen from 4.75% where they are now to as low as 4.25%. That would be good for bank stocks because, of course, it increases people's ability to repay their loans, and understandably, bank stocks have been reasonably strong in the past few weeks. Despite the talk of rate cuts, the $A is reasonably firm, currently buying 102.5 US cents. The big issues, of course, leaving aside the Occupy Melbourne protests and the downfall and death of Muammar Gaddafi in Libya, is, of course, what's happening in Europe. Now, France and Germany are edging towards a final deal that hopefully should bail out the European banking system and the weaker European countries. It's going to cost north of €1 trillion. It's a colossal sum of money. It is really going to test Germany in particular's commitment to the Eurozone. I think Angela Merkel, the German Chancellor, will get the deal across the line. What the German taxpayers and voters think in the long run is anybody's guess, but we do need Europe to be fixed up. If it's not, if it all falls apart again, well, the relative recent strength you've seen in the share market, the recent strength in the Australian dollar, commodity prices, everything else, all that will be undone. So our eyes are on Europe. Hopefully things will be worked out. Talk to you again soon.